the flow. Yeah.
All right.
So
let's do it.
5 seconds just to get my background noise recorded.
Vocal exercises, always important.
You can go higher.
Nope. No, I cannot. I never had good range. I was never a good singer. I enjoy singing, but I never had enough range to be good.
Thank you for the introduction. Hi, Anthony.
How
are you?
Hey, how are you? It's good to see you. It's good to hear you again. It's been a busy few weeks and months. I'm not going to lie. I have just recently recovered from about the flu. My nasal passage and my voice is back and on song, and I'm ready to share with the audience whatever you'd like to talk about today.
Thank you. I'm happy you're here. We have a lot to discuss. About blockchain, sustainability, NFTs, the future, the past, and of course the present. So yeah, let's get started.
I'm excited. Is this going to be a 1 hour show, or do you want to do this over 2 weeks? That's a lot to cover.
Indeed. Yeah, there is a lot to cover. I'm just curious to know, what is this title, Anthony? Partner, blockchain partner at IBM, or what is this? Tell us.
Yeah, everybody thinks I'm kind of responsible for ecosystem management, or that I kind of take the bins out or something. It's really just a consulting construct. Is kind of the senior most rank in a consulting firm as a partner, because you have equity in the business and therefore you're considered a partner. In reality, my job is about helping governments and enterprises to think about strategies, technology design, and implementation, most commonly around blockchain. Although a lot of time we do digital strategy work or network design type activities where you actually don't necessarily need to use blockchain at the end of it. So my job is to help people objectively look at multi-party systems, cooperation with technology, creating new businesses or entirely new platforms, and use different ways of thinking to do that.
Excellent. So I mean, it's a full-time job, and along that you're running a fantastic podcast. Blockchain.
Yeah, everybody assumes.
It sounds like a paradox over there.
It's everybody assumes that all I do is podcasting, because that's what they actually see of me. They don't realize that I actually have kind of an 8 till 8 job, which is being a consulting person. So that's kind of the misconception. My colleagues think the same thing too, is all you ever do is like create memes and host podcasts. Like, when do you actually do any work? It's like, it's a bit of an unfair perception, but I have a podcast called Blockchain Won't Save the World. Deliberately ironical title. It came from a live show that I did nearly 2 years ago now, where I was talking about blockchain sustainability. And there's a phrase within my conversation which said, blockchain won't save the world, we will. Insofar as to say, don't hype up the technology. It's not there to do anything. It has no predetermined destiny. These are tools and capabilities we get to use. They're not going to save the world, but if you use them in the right way, maybe they can. Okay. And so that was the inspiration behind the show. I spent the last year and a half, nearly 2 years actually, speaking to experts, helping to break down some of the important topics around blockchain, whether it be cryptocurrency, architecture design, business value design, self-sovereign identity, IoT, and then more recently, country-specific shows, which you were very kindly supporting me on. We did a number of different deep dives with between kind of 8 and 15 or 16 interviewees, specifically looking at how has blockchain emerged, what's the current state of play, and what's the future direction, what more is needed to scale in countries like Brazil, Israel, Malta, Germany, Netherlands, Singapore, Switzerland, the UAE, and there's loads more coming. It is absolute self-sabotage from an editing perspective. Never take on the editing responsibilities for a 16-person show. It takes a lot of hours to do in my free time when I'm not doing consulting, but it is some of the most fun I've ever had, getting to meet some incredible speakers, some incredible learnings that anybody who wants to understand what's happening in the real world and how to build a blockchain business, I would recommend to go and give it a listen.
Highly recommended. And you're super active also on LinkedIn. Which is
I try. I mean, my job is to help take the hype out of blockchain. That's how I see it, is to help people realize the art of the possible with developing decentralized technology or working with collaborative technology, particularly in some of the issues we're facing around sustainability, where no company doing incremental improvements in their own box or with their own operations is meaningfully going to change anything. So the future of how we're going to maybe save the world, or at least avert a climate crisis, is going to come through collaboration. And we can only really do that on a global basis if it's enabled by data and technology. So this is an important domain for people to realize and to understand better. And as much as I can with a small amount of time during the day, I try to help people realize what's happening for real, what's possible, and to help people have a more objective perspective on what can be done.
Absolutely. And thank you for everything that you do. It's fantastic. And I keep on going because there's a way to go. So thank you, Anthony, again. So we met something like 5 years ago or 4 years ago, before Corona. And the blockchain industry just started almost, I mean, in terms of communities, in terms of projects, and we've made a long road. I mean, and on the way we saw a lot of things. And can you just give us a bit of a summary and what's next?
Yeah, for sure. I mean, my first consulting engagement working with blockchain was, I think, 2015, then went on to take on different roles at Deloitte, then moved to IBM. And I think we've been through a little bit of cycles, you could call it. We saw decentralization, borderless trade, borderless crowdfunding in the form of ICOs, and token raising become most people's first introduction to, well, if I create a protocol or if I create a decentralized business, people can put funds into that can support my development roadmap, and I can go on to build something meaningful. But not everyone did. A lot of money poured in, not necessarily that many great projects poured out, but that's okay. That was our first sight of how do we think about developing new businesses, new ways of working with technology. And that was 2017 or 2016, or even before that. I'm not going to go so far back as the Bitcoin white paper, because I think I would rather focus on companies and building and initiatives and enterprise and governments and what's been going on since. I think then you had a bit of a quiet period in between where you saw lots of relatively large enterprises, the likes of Walmart or Pfizer, who were exploring distributed ledger technology, DLTs, and looking at a way of creating data platforms to improve processes, to improve trust, to reduce friction, to reduce costs, to make consumer-facing businesses easier to run or less risky. And that was probably the 2019 to 2021 phase of things, when I think the importance or the interest in and around this type of technology then flipped back to decentralized finance, and the more recent distraction has been NFTs. We've always had tokenization. We've always had the ability to create tokens, ERC20s, ERC721s, but we've found our little recent niche in digital artwork and collectibles, which I think is super fun, and we can talk about that later. But I think the more interesting recent observation is that traditional financial services products like lending, like mortgages, like investment type products, beyond just speculation in crypto, being able to provide an annual return or annual return rate on an investment, whether that be with fiat money or crypto, is changing the way that financial services is being operated. Also payments, the same way. You're seeing actually a number of governments looking at cross-border payments or central bank money, central bank digital currencies in a different light, in a more digital and connected and borderless light, which I think is positive. How those end up in production, how those end up in practice will be contentious without question.
Right.
And they don't always have to involve blockchain either, right? Let's be clear. But where that puts us now, I think, is super interesting. We've flipped back to financial services. But what we've demonstrated is that there is an ability to globally raise huge amounts of capital to support projects that are meaningful. Those projects are having pretty large transaction volumes, pretty large user bases. We're seeing still a little bit of a proliferation of platforms. So where maybe 2 or 3 years ago, you'd say, well, it's only Bitcoin, Ethereum, and maybe Cardano on the side. You've got Algorand, Avalanche, Solana, like, Near, I can go on. And there are more protocols coming out every day that are continuing to expand on that. But I think we've seen a resurgence of value, of focus, definitely a resurgence of capital and investment. far fewer scams, far more legitimacy in terms of the businesses. It's still a little bit opaque for the everyday person, right? I think the entry point for the non-blockchain or the non-blockchain indoctrinated, if that's a thing, is still either monkey JPEGs or Bitcoin, which, you know, like it or love it, at least gets people talking about it.
Yeah.
But anybody who goes a level or two down below that, I think will be pleasantly surprised in 2021.
A question, I mean, out of nowhere, but what's the secret sauce for a crypto success?
I'm definitely not the first person to say that, but I think it's value.
Yeah.
I think this is for blockchain, for crypto, for any technology development of any kind. It can be technically feasible, and 99.999% of the blockchain projects out there are technically feasible because we've had 5-6 years to develop protocols, technology, integrations, APIs, all of the required capabilities, zero knowledge proofs, identity management, consent management, being able to manage node networks, load balancing, different flavors of blockchain that you can use. There's all of those technical capabilities underlying what you could build as a platform exist. The next 2 points are, is it desirable to a customer? Does somebody actually want it? And is it viable commercially? Can you actually fund it? Is there a commercial case for doing this? Just by creating a decentralized YouTube or a decentralized Uber, are you actually going to scale that? If you exist in a purely digital world, like DeFi, for example, you've got a greater and lower friction path to success because everything is natively digital. If you're talking about crossover into the physical world, when we talk about supply chains or sustainability or traceability of medicines or any of the things that require physical integrations with supply chains or real world organizations, there's a friction point there. There's a barrier to adoption there. There are more organizations, more people involved in the required transformations there. So the cost goes up, the required political capital goes up, and those initiatives become more complex. Ironically, those are the ones that I get to do on a day-to-day basis more often than not. So I've already chosen to be in the more difficult place by luck or by not. But if you don't have a viable business model, a viable way of creating value for the people that you're going to be supporting as either customers or consumers, your project is very likely to fail. Honestly, this is startup 101. This is not anything new.
Indeed. And I saw a lot of projects here in Israel, excellent projects, actually, for the past maybe 4 years, in terms of payment transferred, in terms of insurance, and a bunch of them, actually. And yeah, I mean, even in the vegan industry, the question was much more about the community and the value brought by the currency than the capacity in terms of technology and the integration. I think that there's still a way to go, but again, the mindset that is required to build a new token to the market is still and remains, for me and personally, a challenge, and that adoption step is essential.
The barriers to entry are low, which is good news. That's the good part. Right? And to some extent, with a number of these businesses, they're funded to the point where they don't necessarily feel the same pressures that a startup that's funded on Kickstarter or that's funded through traditional VC may struggle with, because they can sit back and say, actually, we don't have to spend as much of our time worrying about fundraising. We can really focus on real value and real community building and engagement. And that becomes a critical skill now. Scaling isn't just necessarily just about product anymore, nor was it before, to be honest. Right? If you're in the liquor business, you've still got to get your distribution right. You've still got to get your branding and marketing right. You've still got to get people sampling and trying the product. None of that's new either, honestly speaking. But the barriers to entry for digital businesses, for businesses that want to operate with tokens and raise funds and to have some sort of token-based economy in their business model, those barriers have never been lower. And so that will enable proliferation of more projects. That will enable the ability for more people to get access to it. Funding for those projects is pretty much borderless at this point as well. The crypto industry is relatively buoyant in terms of the amount of capital that's in it and that can move around. So actually, it's a great time to be in that space if that's what you're passionate about.
Yeah, what would be, and that's about much more of an opinion, personal opinion, what would be the key asset to choose? In what cryptocurrency should we invest?
Spoiler alert, this is not investment advice. This is not even good advice, right? I would very much more likely turn to anybody on YouTube with a crypto channel other than me for investment advice, right? So I don't want to go there at all. But when you look at projects in the same ways, take the word token out of it and replace it with the word startup. Right? So what is the success rate of the people who are leading the organization? What is the clarity and uniqueness of the strategy, right? Because if you're going to come out tomorrow and say, I'm going to start an online streaming business where you're going to be able to stream movies, videos, and TV shows over the top into your home, somebody's like, oh, that's fantastic. So you're going to build Netflix? Oh, crap. Someone's already done that, right? Or worse, you're saying, well, I'm going to build Netflix, but on the blockchain. And it's like, okay, and why is that going to be more compelling to the everyday household and the 250 million users of Netflix today, right? How are you differentiating that project? And it's not because of transaction throughput, and it's not because of sharding. These are not the things that differentiate you as projects or as initiatives, but a lot of those protocols are there to take out some of the barriers to entry for the projects to build on top of them. So that gives you a second layer of complexity in your evaluation.
Right.
But my sense would be evaluate projects and initiatives in the same way as you would investigate a startup or a physical business that's trying to sell something in the real world. And if you follow those same principles, chances are it will be successful. There will still be outliers, right? Meme coins are still a thing and people love memes. And that is an irrational stage or an irrational segment of the market that I think is super interesting and fun. And I love that it's there. And it wouldn't hurt to have a SHIB or a Doge or two just for the hell of it. But I'm not putting my mortgage there because the likelihood of the volatility and the swings in that space, you know, if you've got cash to burn, if you want to have a play and you just want to see what happens, there's so much out there you can do. You know, buy $100 of everything and see what happens. Right? It's a bit like going to the race course and putting $100 on every single horse. Yeah. Maybe you make your money back, maybe you don't. But yeah, I think if you're looking from a pure investment perspective, you've got to act like an investor, not a speculator.
Yeah, and I'm just, you know, out of curiosity, I see a lot of people talking about, you know, and comparing between gold and Bitcoin. And for the past few weeks, I see, you know, almost all my feed on LinkedIn is about, you know, polls and on what to bet if there is a crisis. So what's going on? I mean, what's happening?
I love this one. This is the apocalypse theory, right? Which is the better thing to hold in the case of a complete governmental or systemic meltdown. And you know, with all of this, smart bet is don't put it all in one basket. Right? If you want to have something that is divisible and tradable with others, food is a good place to start, right? Start stocking up on pasta and flour if you want to go there. Gold is divisible. A gold bar is very difficult to trade for a cabbage, right? So having gold bars in your house might be limited. Yeah. So think about how divisible that's going to be. And then crypto is only really going to be accessible to other people who acknowledge and value having crypto. So if you're going to try and exchange your Doge coins for cabbages, are you going to have other people out there who are going to accept those things?
Can we say, as of today, that cryptocurrency is about to become sustainable?
That's a very broad statement, and I don't think I'm going to let you fish me into responding to this one, but I'm going to try and break down the statement to help others understand how I would look at it.
It's an open question, of course.
Because I mean, sustainable from what perspective, right? Is it creating carbon? Is it using energy? Is it consuming fuel that is non-renewable? Yes. As is the internet, as are mobile apps, right? How do we get more sustainable computing? How do we get lower compute protocol management? Lots of ways. Right? Proof of work is clearly not one of those. Proof of stake is helping. Lots of other ways that we can reduce the computational power of blockchains and the rest of the server-based industry in the world. You know, there's a lot of pressure on those server farms, those compute companies, Google's, Amazon's, et cetera, of the world, to try and find a more sustainable way of managing that footprint. working with energy companies, et cetera, et cetera. Is crypto sustainable from a price perspective, or from a value, or from a, is this a bubble perspective? Much better people than me to evaluate that one. Some people will say that there is more room for adoption, there is more room for growth, there are more organizations in the world that can be using blockchain infrastructure, tokens, cryptocurrencies as part of their propositions, which tells me there's runway for this technology to continue to do meaningful things that has real world value. So from that perspective, for sure.
Yeah.
What are the other lenses for sustainability in terms of social impact, in terms of inclusivity?
Of course.
I think blockchain sets a really interesting example. A couple of guests who I've had on the podcast have talked about the open source community and the kind of the gig economy around blockchain for developers being actually more inclusive than a 9-to-5 in so many different ways, because people who have families, people who have unusual working hours, people who have commitments, male, female, any nationality, any sexual persuasion, all of the above can participate. What you are judged on is as much the code that you create, the content you create, not who you are, what you look like, and where you live. And so from a sustainability perspective, or from an ESG perspective, I actually think our community is driving forward a lot. I still use the Squid Game meme the other day around looking at blockchain and technology conferences, because whether we like it or not, a lot of the blockchain industry is the kind of crossover of the financial services industry and the tech sector, which are not necessarily the most diverse places to create a force multiplier to start with, right? And the panels you see and the conferences you go to, it is still a lot of white male faces, and I'm one of them, right? I'm part of the problem, but I believe we can do better, and we will.
Yeah, I think that's an excellent point, because I think that you heard about the success of the cryptocurrency in Brazil and South America in terms of services and exchanges and transaction. Actually, digital transformation is just getting started, and there is a lot of interest in whatever is related to blockchain. I'm by myself getting a lot of requests about how does it work, what do we do in terms of financial perspective, but also in terms of investment, and is the blockchain technology itself is having some new, added layers, etc. I've been working with IBM for a while. We saw a lot of evolution, but I'm curious what's going on in terms of frameworks. How can new companies, especially startups, can better address the challenges regarding impact, such as the challenges in Brazil or any other countries in the world that is in trouble? What should we do? What is the stage here?
Where do we start?
Yeah,
I think the good news is there are so many projects out there that have started to look at using technology to address climate, social challenges. There are so many examples of people having digitized processes, being able to use innovative and exponential technology, satellite data, drone data, IoT devices, to be able to digitize the physical, using data platforms, cloud, blockchain, if you will, to provide a transparent and auditable platform on which to put certain information, to make information more transparent, to make it more easy to address. Again, from a funding perspective, a lot of examples of being able to fund particular projects. If you look at one of the partners we work with, Farmer Connect, a big part of their coffee traceability project is the ability to crowdfund local projects in the areas where they source their raw materials from, where they source their coffee from. And so that's just another way of creating crowdfunding or inserting crowdfunding as a means of enabling transformation without putting the burden on the corporates, or without putting the burden on the banks, or without putting the burden of creating an interest rate. Whether you use crypto for that or not doesn't really matter. It's changing the way that you do the business model. A lot of the issues, though, in being able to create some of these platforms, well, first things first is who pays for it. That's non-trivial. If you're going to create something that's country specific, maybe you can get a consortium of the willing together. Maybe you can see if there's some funding from a government perspective, see if there's some funding from the founding parties of these sorts of things, which oftentimes helps. The further challenge is actually the establishment of regulation or standards against which your technology works. As we both know, if you can't define the thing, the artifacts, the objects, the data, the processes, the regulatory requirement, the cost or the quantum against which your system needs to operate, it's going to become much, much harder. Right? So you can go out, and I was having a conversation with a gentleman earlier today about biodiversity and creating particular plots of land that's set aside to offset land that's taken up from development of new buildings and offices and so on. And the challenge there is, thing one, how do you validate that that land hasn't been sold, used, cropped, or whatever it is? So you've got a digital twin challenge to start with. Second thing is, at what point do you develop? Because the regulation is still under development in certain countries by the governments that are in question. If the private sector come together to develop something in isolation, it has a risk of being rejected. If they try to work with a government organization straight away, that government organization may struggle with independence, right? So they may be able to give guidance, but may not be able to participate, which means that the organization that's ultimately regulating may be challenged. If the government is required then to develop the technology by themselves, it might be slower, less effective, might get less traction because you've got fewer participants. And I can go on, right? So there's a meaningful challenge in how and when you develop the technology, not just what it does and on what type of platform it's based.
Well, we suppose that, once the technology is adopted by the masses, so the costs are getting lower. I was wondering, we saw the crisis in terms of supply chain perspective for the past summer. Now the prices are getting lower. There is a lot of constraints on the way, on the processes and everything, but logistics and also productivity and growth as dramatically decreased. How blockchain today can solve these issues, or what would be the key to boost the issues here and the key?
I may have said it earlier, but blockchain doesn't save the world, people do.
Indeed.
And whether we like it or not, having people who are familiar with blockchain technology as part of these initiatives is helpful, because we appreciate and have experience of working co-creatively to build technology platforms. So rather than bringing in a single corporate or a single institution that says, well, I'll build all this for you and you can all pay me. I'll run all of this. I'll define how I think it should work and you can buy it from me later. Doesn't really fit. How do you create open governance? The concept of DAOs, while a little bit alien to most, is really just about digital governance. And how can you draw a link between digital, open and fair governance, which then has traceability into the actions you take later. I'm not saying that every sustainability project deserves a DAO and every DAO should be a sustainability project, quite the opposite. But the issues in accelerating adoption of technology lies firmly at the feet of how people act and how people frame and address issues, not which technology platform you choose to then as a result implement it, which is not a great answer for somebody who is talking on a blockchain show or is talking about blockchain more broadly. But if you're talking about barriers to adoption, we have plenty of examples of technology accelerators that exist in the world, IBM's and other people's. We have plenty of examples of automation of processes. We've got a huge amount of innovation in the first and last miles that we can draw on. The bit in the middle is either there being a commercial incentive, either governmental or driven by customers in some cases, right? Why should we change? The IT divisions or the IT functions of government and every other major organization in the world's focus is simplicity. Reduce complexity, make it easier, reduce the number of vendors, just try and survive at the lowest possible overhead cost. Yes, innovation does come into it to some extent, but working in these sorts of initiatives, in these sorts of multi-party systems, in connected supply chain initiatives, requires different people talent, a different mindset, a different procurement function. In a lot of cases, procurement functions for the last 30 years have been beating up suppliers to get the lowest price. And then the organization wants to turn around to that supplier and said, oh, and by the way, would you help us co-create a cloud-based data platform? I know what I'd say, right? Either pay me more or show a way that you actually genuinely value my partnership.
Yeah.
And that's not the way that a lot of organizations who have a stake in this change or who have a role in this change are wired today. And so there's significant people and structural change and incentive-based change within organizations who have to start driving this as well.
Do you think humanity is ready for that?
I don't think we have a choice. I think there are going to be some people in roles today who probably won't be in them in 12 months' time, but that's not necessarily a bad thing.
Yeah.
You know, the bad cops are always needed somewhere, you know, to beat people up, to make something happen. Maybe that's to beat up the laggards who don't participate in sustainability initiatives. I think there's going to be a huge opportunity for new and emerging skill sets around co-creation, around network effect, around scalability, around creating shared incentive models. You know, people who are statisticians, economists, around automation, around doing more with data, around, you know, patching holes in data. You look at a lot of company statements around their initial path to ESG compliance. They set a 2-year window to just go and find their own data.
Yeah.
Right, which is 2 years wasted if they're not doing something meaningful at the same time to have an impact.
Of course.
So we need to be better at working without perfect data, or working between the gaps, or trying to fill the gaps in a way that doesn't involve us doing a forensic, person or people-based, company-wide initiative everywhere we go, because that's just going to be hell.
Yeah, indeed. We saw a lot of failures in the processes for the past couple of years, actually, in terms of integration. I can attest, and I can tell. What would be your recommendation for new startups getting started, you know, in the blockchain industry?
I think it goes back to what I said before. I mean, the great news is the barriers to entry are low. There are, even if you're not looking to found something yourself, there are so many businesses that are looking to scale up that require commercial, legal, marketing, engineering, tokenomics capabilities. Even if you're not looking to create your own thing, we may not need more protocols at this point. We may need a period of time for the existing protocols to bed in, right? We've seen a proliferation of, you know, 5, 10, 50 new major protocols entering the top 50 by market cap in the last little while that are all layer ones. We've seen a number of layer twos that have been getting a number of really interesting projects tied to them, number of, you know, enterprise and corporate type initiatives or recognition from a number of different organizations in the world, which is great. And obviously layer twos in some cases are there to make the layer ones look better, because the layer ones weren't designed very well in the first place. And so a lot of the competing layer ones are there to you know, beat down Ethereum. But there's still been a lot of that. So I don't know necessarily whether the world needs more protocols or whether it needs more applications or platforms that leverage those layer ones. Regardless, I would say, back to the advice I gave before, understand the problem you're trying to solve, set clear objectives for what you want to achieve that you can measure, quantify. It shouldn't be a market cap, would be my suggestion. It should be an impact of some kind. Have a clear understanding of the team you need to deliver that. Right? Mm-hmm. You're going to need a mix of technologists, integrators, and commercial people, and probably a really good set of lawyers. And blockchain lawyers are not always easy to find, or those who have experience in setting up foundations or working cross-border or corporate establishment, right. HR policies, and so on. There's a not insignificant amount of effort there. Raising funds at this point in time is not that complicated. There's a huge amount of grant-based funding that's coming out from protocols as well, who are giving tokens as grants to companies because they're, relatively speaking, cash rich, albeit in crypto. So that's not an issue as much as it was when we were looking at ICOs. Really, really open and low barrier to entry environment. What I would say is focus on business value, have a clear strategy, have a team around you that can deliver that. Think about your ecosystem and scaling strategy, and also be clear on who are you competing with. Like, what are you in the world relative to what's there today? If you can't pitch what it is you do and why you do it in a simple way without using the word sharding or transaction throughput or powered by blockchain, if you can't do that, then you probably shouldn't be starting yet, because you may not have appreciated the space in which you're trying to evolve or trying to transform.
Excellent inputs. Thank you, Anthony. Can we speak about blockchain in the metaverse already?
I love talking metaverse. I love that metaverse has taken on a kind of life of its own, and now it's kind of proliferating into newspapers and daily articles. I love how the fashion industry's jumped on it. I think that's super interesting because that's just tapping into another pool of creativity and artisans, which is just really powerful for technology in general. It shouldn't just be engineers and coders who have a say in what becomes interesting and innovative. So I love that the fashion industry is run with this. I love that other industries, the comic book sectors, the Mattel jumped in this morning around non-fungible tokens, NFTs, with the Hot Wheels franchise. Sports organizations are going into collectibles, whether that's a meaningful venture or whether that's just a cash grab. Yeah, take your pick. We've seen all of them. As I said, we have had tokenization for a number of years now, and we've been tokenizing bonds, we've been tokenizing palladium, we've been tokenizing aircraft, we've been tokenizing real estate. NFTs and JPEGs is just the next thing in a long line of things that we can tokenize, create digital ownership, digital rights transfer, do some really interesting things with smart contracts around sharing the value every time something is transacted, so that artists and those content creators can be fairly paid for something that increases in value over time. I think that's increasingly a more equitable marketplace or economy to work in. It becomes more transparent, the rules are clear, there's more automation. All of that's good. Genuinely, all of that's really good.
Yeah, indeed. I see a lot of artists, actually, well-known artists, getting into NFTs. For the past few weeks, there are a lot of platforms offering, such a diverse perspective and inclusive. And it reminds me, my job at the IEEE with ethics. So we are getting over there, and and I'm definitely into what you're saying. It's that blockchain can bring some solutions and some great insights in terms of ethics, diversity, and inclusion, and in reflect to transparency. It brings also a lot of trust inside communities.
Yeah, and I love that what non-fungible tokens and NFT marketplaces have done is democratize the creation of digital art or digital assets relating to art and collectibles, which, in the same way as digital photography proliferated the number of digital photos that exist in the world, and then as a result increased the requirement for storage space, which that one cuts both ways. The barriers to entry are low. You're going to get millions and millions of NFTs and millions of pixelated images of stuff that, I've seen dogs and frogs and seals and cats and corgis and take your pick. There are millions and millions of these digital collections that may or may not be worth something. And frankly, if you're in it for the speculation, you've got to be an insider, or you've got to know what's going on for that to be a valuable, effort for you to pursue. That having been said, people have made ridiculous sums of money from buying the right JPEG at the right time. My guidance here is that it's about context and where those digital assets can get used. If you own the digital representation of a bar of palladium, there's only a few places that can be used, right? On metal exchanges and traded to companies that need to use palladium to be able to use it in a production process. Right. If you're looking at digital fashion, or if you're looking at digital images, or if you're looking at loot crates, for example, there are any number of different gaming platforms, content platforms, metaverses where you can use those things. I'm not just talking about kind of Roblox and Decentraland, but being able to port those avatars and that content into more places, the more interesting that becomes as a user experience for me as an individual. Layer on top of that then the history of the item. So if it's a one-of-one Dolce & Gabbana dress that was created for Ariana Grande that was worn at a one-off concert in the Roblox universe that is then traded to somebody in the real world, you have a digital Ariana Grande dress that was designed by a fashion house founder, which I think is interesting for people who care about those things. And then you can track that provenance in the same way as, I don't know, buying Don Johnson's Ferrari from 1985 is going to have value to somebody because Don Johnson drove around in it. Indeed. Right? With blockchain and with NFTs, we have an interesting way of being able to track that provenance in a way that's much easier, much more portable, much more borderless. What I am interested to see next is the crossover of those creators and those interesting people. I don't want to necessarily call them influencers or artists. It could be anybody. It could be politicians. It could be movie stars. It doesn't matter. The interaction of content creators the people who use that content, and then the ability to make that available to people, you know, in everyday life, the average you and I, that the more we can create those meaningful crossovers, I think the more potential this sector has. Just churning out JPEG after JPEG dilutes the value, dilutes the market, makes it more confusing for people, honestly. But the space has moved so quickly in 12 months, and the number of established brands, established players who are entering this space, I think this is moving at a much faster pace than most people realize, which is super exciting.
Exactly. Thank you. Wow. Thank you so much.
That's my pleasure.
And your inputs, Anthony. Those are precious. I look forward having you for the next another episode. But actually, thank you for your bright mind and great insights. See you soon.
Thank you for the kind invitation. Thank you for great questions, and some that I very deliberately ducked. Sorry, audience, but it's always great to talk to you. I love the work that you've done with Blockchain Israel, the work that you're doing with the Road to Sustainability, the work that you're doing in education. We need more people like you. So Yael, thank you so much for continuing to put out the content that you do. And I appreciate the opportunity anytime.
Speak soon. Bye, Anthony.